In 2025, global superpowers are no longer just fighting for dominance through traditional warfare, economic sanctions, or technological innovation. A new, silent battlefield has emerged, one that operates at the speed of algorithms and the scale of global markets. This is the AI trading arms race. And unlike conventional warfare, its weapons are invisible. They're embedded in data, code, and predictive models that now drive the core of international finance. Artificial intelligence is no longer a tool of the future, it is the central force shaping the present. Around the world, financial markets are increasingly managed not by human intuition or experience, but by machine learning systems capable of processing millions of variables per second. These systems are no longer experimental. They are live. And they are influencing everything from stock prices and interest rates to global supply chains and commodities. At the center of this transformation are two dominant players, the United States and China. Both nations understand that financial control is geopolitical control. Both are investing massively in AI infrastructure. And both see autonomous investing as not just an economic advantage, but a national security asset. Let's start with the United States. America has long been home to the most powerful hedge funds, asset managers, and investment platforms in the world. But over the past decade, these giants have begun evolving into technology companies, building their own AI cores to survive in a new financial era. Take BlackRock's Aladdin system, for example. It now oversees over $20 trillion in assets, scanning markets for risk, analyzing macroeconomic indicators, and adjusting portfolio allocations, all through proprietary AI models. Aladdin doesn't sleep, doesn't guess, and doesn't panic. It reacts instantly to data from hundreds of sources, from economic calendars to breaking news to central bank statements. Then there's Palantir, the company known for its ties to U.S. intelligence and military networks. Palantir's financial analytics division now provides decision support systems to sovereign wealth funds and major banks, using AI to model future scenarios, test portfolio stress, and simulate how markets would respond to geopolitical shocks. And let's not forget Kensho, acquired by S&P Global. This AI tool was originally designed to interpret language data, speeches, earnings calls, tweets, news headlines, and translate them into financial insight. Kensho can, for instance, detect subtle changes in tone during a Federal Reserve press conference and instantly assess what those shifts might mean for bond yields or equity markets. But America is not alone in this race. China has been equally aggressive, if not more coordinated, in deploying AI across its financial landscape. The People's Bank of China has launched its own national AI system designed to monitor liquidity, track shadow banking activity, and anticipate systemic risks in real time. This system isn't merely analytical, it's also directive. It guides monetary policy, adjusts credit flow, and influences where capital is deployed. Chinese tech giants are also central to the strategy. Ant Group, for example, has developed advanced behavioral AI models that assess investor behavior down to a granular level, factoring in emotions, habits, and even social media activity. This allows them to optimize how digital yuan is distributed, how credit is issued, and how retail investors are influenced. Baidu's quantum AI division is exploring how next-generation simulations can model entire economies. These simulations aren't just faster, they're probabilistic. They can model multiple futures and recommend optimal strategies based on current inputs. The difference between the US and China, however, goes beyond the tools. It's about how those tools are deployed. In the United States, AI development is largely driven by private firms, each competing for returns, market share, and investor attention. In China, AI is state-aligned. It's part of a broader policy to position the nation as the dominant economic force by 2030. And that's where the tension begins. What happens when these systems begin to interact, or collide, on global markets? What happens when US-based AI algorithms detect signals generated by Chinese AI systems, and respond automatically? We are already seeing early examples. In early 2025, a sudden spike in gold prices triggered alarm bells across financial media. Gold soared past $3,200 per ounce within hours, with no immediate news or explanation. Later, it was revealed that multiple AI trading platforms had picked up patterns in European bond yield movements, diplomatic language shifts, and commodity futures, all pointing to an imminent monetary policy move by the European Central Bank. These signals were invisible to humans. But the machines saw them and acted. This isn't market intuition. It's machine perception. And it's faster, colder, and more efficient than anything a human trader could replicate. But it's not all upside. There are growing concerns about systemic risk. When too many AI models rely on the same datasets or interpret the same signals, it creates the risk of herd behavior. In 2023, for instance, an AI-generated panic around a fake Bloomberg headline triggered a brief but severe sell-off in global equities. The headline was fake. But the machines didn't wait to verify. They acted. This kind of flash reaction now poses a real threat to market stability. There's also the question of bias. AI models are only as good as the data they're trained on, and in many cases, that data contains historical inequalities or market distortions. If these biases are encoded into the AI's decision logic, the results could be amplified at scale, leading to poor investment decisions, systemic exclusion from lending markets, or mispriced risk across entire sectors. Even more worrying is the issue of AI espionage. Reports in late 2024 indicated that Chinese cyber units had gained access to several Western trading algorithms. While the full details remain classified, it is believed that the breach allowed Chinese financial institutions to reverse engineer parts of their U.S. counterparts' strategy logic, giving them a short-term edge in major trades. This isn't just cybercrime. It's financial warfare. And yet, despite all these risks, adoption is accelerating. Retail investors are jumping on board as tools become more accessible. Platforms like Composer and Kavout let users create and deploy AI-based investment strategies with simple prompts. Some apps even use generative AI to build entire portfolios based on your personal goals, news preferences, and market sentiment triggers. This democratization of AI investing is powerful, but it comes with a warning. The same tools that give you an edge can expose you to invisible risks. If you don't understand how your AI works, or worse, if it's trained on poor quality data, you may end up chasing trends instead of building wealth. So what should investors do? First, embrace AI, but wisely. Use it as a tool, not a replacement for critical thinking. Understand what data your models are using. Verify results. Cross-check predictions with traditional fundamentals. Second, watch the global game. When China deploys AI in one market, it can ripple through others. When the US adjusts its AI regulations or bans certain chip exports, it affects how algorithms perform. Third, diversify your perspective. Don't rely on a single AI model, a single country's narrative, or a single market signal. Build resilience, not just return. Because in 2025, financial intelligence is no longer human exclusive. It's artificial. And it's everywhere. The AI trading arms race will not end with a single winner. But it will reshape how money moves, who controls capital, and what the future of global finance looks like. In this new era, the most valuable assets won't be gold, oil, or even Bitcoin. They'll be algorithms. And the question remains, will you master the machine, or will it master you? If this deep dive into the AI trading war opened your eyes to the future of investing, don't forget to subscribe to AI Finance Mastermind. We're here to help you stay ahead in a world where knowledge and technology is power. Hit the like button, share this with a fellow investor, and comment below. Do you trust AI with your money? This video is for informational and educational purposes only. It does not constitute financial, investment, or legal advice. Always do your own research and consult a licensed advisor before making any investment decisions.